Welcome to MasterChartsTrading.com market recap for the week ending Friday, April 17th, 2015. Most of the week, stocks kind of chopped around and then sold off pretty hard on Friday. And that in the long term, I still think that the uptrend in stocks remains. Bonds also held important support and may be the recipient of some of the money that's being rotated out of stocks. Gold and gold miners are holding on to support for now. Also, I wanted to touch a little bit upon candlestick patterns and not reading too much into them. And the energy sector and oil put on a pretty stellar performances this week as well. Here's an important disclaimer. Let's go on to stocks now. All right, so I've shown this chart in the past. So this is a market timing chart that we use here at MasterCharts Trading. So this is a chart of S&P 500 large cap index. So our latest buy signal was on March 16th of this year, and since then stocks kind of went up and down, but really didn't really go much anywhere. They sort of chopped around most of the time. I mean, we're up a little bit. We're up about maybe 0.5% or so since the entry, but there is still no convincing breakout to the upside. There is also no convincing breakdown to the downside, and there is, like I'll show in the next chart, there is quite a bit of support in this area for S&P 500 at about 2040. And then further down at 2020, there is a 200-day exponential moving average as well. So stocks are kind of trading in a range, and this could be like a triangle consolidation, and then breakout of this triangle to the upside would be bullish, and breakdown would be not bearish, but just not bullish. Because long term, the trend is still up, so a resolution to the downside would not necessarily make S&P 500 bearish. It just means that there is a deeper correction that might be happening. As far as the advanced decline lines, you can see advanced decline line is making higher highs, and so is the stock market itself. It's also making higher highs. So I don't see any divergences yet. There is a high high here, and there's a slightly lower high here. So far I don't see any divergences in the advanced decline line and the underlying security. We're still on a breadth thrust up, so so far it has not been negated either. QQQ, the PowerShares QQQ Nasdaq 100 trust, is a little bit weaker, I think, than S&P 500 because you can see here it actually closed below the 50-day EMA, and let me go back to the S&P 500. Here it didn't close below the 50-day EMA, so QQQ is somewhat weaker than S&P 500. And you can see it actually gapped down here. There's a pretty big gap here, and then continued down. So this is weaker than the S&P 500, but not necessarily bearish again, because it's not bearish because we just hit new highs here. So definitely new highs tell me that we have an uptrend, and you can see the same thing. 50-day EMA is above the 200-day EMA, and prices are moving from the lower left to the upper right. So this is a bullish chart. As far as the advanced decline line, it's similar picture. Advanced decline line, I don't see any divergences. It is confirming the highs and the lower highs in the QQQ. Of course, TLT bonds was the recipient of some of the money that rotated out of stocks today, and you can see it was a nice big gain today on Friday, over 1%. Also, it seems like it has broken above the trend line that I drew here from the top to this top here. Here, didn't close above it, but here it did close above it. So I'm going to go with the bullish resolution for this, what appears to be kind of like a consolidation range. Our buy point was, I believe, around here. And then we still have a position open. We did take profits. I mentioned last week we did take profits, but we still have some of the position open still. And last week I mentioned that SCTR, Stock Chart Technical Rank, which is a rank that is assigned to all of the ETFs that are not leveraged, and they're ranked against one another. And last week I mentioned that it was dropping. It was above 90, and then it dropped to in the 40s here. But then it rebounded. You can see it rebounded today to the 70s again. So it's actually not that bad. So bonds are holding their own, and it does make sense because usually when money is rotating out of stocks, it would find its way into bonds. All right, gold. First of all, gold is a long-term bearish security. I mentioned this repeatedly in the past. Very easy way to tell if it's a bearish or bullish. You can see the prices are moving from the upper left to the lower right. Also, you can see the 50-day EMA is below the 200-day EMA. Here in mid-March, we see some pretty strong rebound, and this is still, in my opinion, a bear market rally. And then it rebounded, and now it's sort of consolidating. Here it was rejected, this big rejection candle. You can see it here, and then it keeps consolidating. So for now, gold, I mean, it's not doing that bad actually. It's doing okay. What the gold bulls want to see is continuation higher and a close above the 200-day EMA. Possibly another consolidation, and then finally the 50 EMA will catch up to the 200-day EMA, and then many people will think that the security is bullish and they will buy it. For now, as it stands right now, it is still a bearish security. So I will continue to look for a shorting opportunities. And as a matter of fact, GLD did, as a gold trust, GLD gold trust did give us a signal right here on April 14th, but this signal was not confirmed by the gold miners themselves. So let me show you gold mine. So you can see here there was a signal right there. But the gold miners, GDX, here's the same market timing chart. There was no signal here for gold miners. So I figured I better make sure that gold miners and gold itself are on the same page, and I did not open a short here. And let me go back to gold miners. So this is a gold miners a candlestick chart. You can see that it had a pretty sizable rebound from 17 and change to about $20. So that's pretty nice rally here. And you can see there are trend lines that I drew in here from the tops and from the bottoms. And it did close above the 50-day EMA here, and it also broke out of this consolidation to the upside. Now, here there is resistance from this gap down in the $20 area. So it looked like on Wednesday, I believe, it closed above the resistance, and I thought, oh, that's kind of bullish. But then it kind of closed back down, and the same thing today on Friday. It kind of stayed below this resistance area. So this resistance is still alive and well, and for GDX needs to push higher and basically just break above this resistance. For now, as before, as gold itself, also a bearish security. So I will continue to look for a shorting opportunity within this bigger downtrend. Let me just refresh this chart, see if we got the new values for Okay, so yes, we did get new values here, and it's not really much changed as far as the advanced decline percent and advanced decline volume percent lines. You can see, I highlighted this in the past, GDX itself is making higher lows, but the advanced decline lines are making lower lows. In fact, this is a new low and new lows for them. So it's not looking really good as far as the underlying internals of the GDX. Same thing with bullish percent index. It did improve somewhat, so now at 30%, which is pretty good. So 30% of the GDX index stocks, 30% of the stocks within GDX index are on the PNF buy signal right now. As far as new highs, new lows, none were registered, so we're kind of stuck in the trading range for now. And once the signal is given, I'm waiting for a short signal right now, because right now both GDX and GLD are sufficiently overbought for my taste. And since this is a bearish security, I'm looking for overbought conditions within it so I can short it. All right, so next is energy, XLE Select Sector SPDR Energy Fund. So energy had a pretty decent run from mid-March, together with oil. Really, the oil and energy sectors are tied pretty strongly together. And you can see that here we had several signals, several bearish engulfing signals that were not confirmed. First of all, what's a bearish engulfing? So bearish engulfing is so this is each of these sticks represents a 1 day's worth of trading activity. So here we have a small candle body. So for example, open was here and the close was here during the day. And then the next day, the security gapped up, but then entire day kind of kept selling off. So you can see it was exactly the same issue right there. And I'm talking about the real body, by the way. So real body and not the wicks above or below it. So here you can see the real body is covered by the next day's candle entirely, and the same thing here. So we had two bearish engulfing that were not confirmed, because the next day we had a bullish candle on both occasions. And I just wanted to show this as a good example of not reading too much into candlestick patterns, because they far from always work out. And if you're trading on candlestick patterns, it's sometimes you definitely need a confirmation. So a good confirmation would have been like a gap down here or another bearish candle, but none of this happened here. And then here, maybe this is a shooting star, or maybe it's just a spinning top indecision. But in any case, I don't think it was confirmed, because I think the close is still within the level of yesterday's range. So for now, and also the XLE closed above the 200-day exponential moving average and held the support here. So I'm more inclined to kind of just leave this alone, if anything, because it's getting a little strong for shorting and maybe not really strong enough for buying long yet. So it's just kind of in between the betwixt. If oil rolls over, XLE will surely follow. So next, let's look at oil. So West Texas Intermediate crude oil, pretty good run, from mid-March till now. This is about a little bit over 30% run, and it kind of just kept popping through those resistance levels, and now those resistance levels become new support levels. So the latest resistance level was from the February highs here, and it just popped above resistance on Wednesday, close above resistance right there. And next day it held support, and it held support again today. So it's not looking too bad right now. So there is now quite a bit of support in this $51 area. So, you know, we'll see how it behaves, but for now, oil is still bearish, so I would be more apt looking for a shorting opportunities within this bigger downtrend, and it's already, you know, getting into the overbought territory. So far, I didn't get any signals for oil yet, and we'll be on the lookout for any shorting opportunities. All right, quickly let me show you how to find us on the internet. Go to MasterChartsTrading.com. Here we have, soon we'll be starting the trade alert services, and working as quickly as possible to get them, you know, to you as soon as possible. But, you know, it's taken a little bit longer than I expected, so please stand by. While there, please do sign up for our email mailing list, so you'll be the first ones on the list to get a special pricing for the services. Also, we do have video section right there, and the videos will be posted there, and the blog as well. As far as the public chart page, most of the charts that you see in this video will be posted here in the public charts page. Also, if you have any of the following social networking site accounts like Twitter, Facebook, YouTube, or StockTwits, you can find us there as well. All right, that's it for this week recap. Thanks for watching, and have another great week. Bye-bye.